So what do you think about me renaming this channel to 9 to 5 to dream about freedom and back to 9 to 5? Because at the rate I've been going, that's what it feels like. Hi, my name is Alex. This is 9 to 5 to freedom. In today's video, it's going to be a little bit tough for me to get through. Okay, lots of things have transpired in the last couple of weeks. Some things have transpired today. I'm going to cover all that. What did I do to my portfolio, my decisions, reasons behind it, and what I'm looking to do next. So let's hop right into it. I'll start with the post that I did on the channel today, and this was pre-market this morning. Now, pre-market, if you guys are new here, I had most of my money in WPay. Okay, so pre-market, I was down another like almost $8,000. I went to Yahoo News site, all the articles are like market sell-off, all this kind of bad stuff's happening. I looked at the chart of the way it's just been going, and I did not know if I could continue to stomach continued erosion. Now, obviously, this fund's very new. We knew that it's not as well diversified. I made a mistake last week. I doubled down. I bought more shares on margin because I thought earnings would be good. And we did have good earnings last week, and this was what was crazy. Every time we had good earnings from Robinhood, from Palantir, we had major sell-off. Now, today seeing the market open up, pre-market very, very red, I thought we were for sure going to have a huge sell-off. So I posted on the community. I pretty much stated my reasons. Now, again, I don't give out financial advice. I don't tell people what to do. I laid out what I did. And I decided to take a loss. This morning, I sold all of my position on WPay. And these were some of my reasons behind it. We have seen big tech sell-off in the last couple of weeks. Bitcoin has been selling off as well. We know that economic data on jobs has been a little bit of a hush-hush. With the government shutdown, there's a lot of uncertainty around that. Now we're coming down to a 50-50% chance of a rate cut for December. Now, there's also tariff decision by Supreme Court. Is it even legal? We have NVIDIA earnings next week. Now, again, with the other companies getting great earnings, but sell-offs followed by that, NVIDIA is the most valuable company in the world right now. It has the largest valuation of all the companies. And it has a lot of these tech and AI companies that are obviously tied to it, that they're all in the business together. And what if the same thing happens again? Great earnings, sell-off. I'm not sure. It could be the other way. We can have great earnings and we can have a major rally. I don't know. But again, my mistake was being bullish last week, increasing my margin, taking more on, and then seeing that hit with double the leverage basically at that point. Now, WPay is not a covered call. We've seen it bounce back from down days, all this kind of good stuff. It is, though, 1.2 times leverage, and I was holding 45% on margin. So that combination there did not make me feel very good. The other thing I'm coming to the conclusion is it's kind of learning from my own mistakes, right? I've been kind of chasing one-trick ponies this whole year. I had Ulti, I had Misty, I had all sorts of stuff. This year has been just a year of experimentation. And really that's what this channel is about. It's my journey of me experimenting with different funds, learning, making mistakes, losing money, making money, all this kind of stuff. If you're new to this channel, I mean, back in the spring, I got into day trading with not a lot of experience. And I had a rally of over 3 weeks of great earnings. I was profiting. I had a day where I made like $7,000. I was like so impressed. I'm like, this is so easy. And again, that was like a period of the bull market. Now, followed by that, I lost my edge. I got more risky, more reckless, and I lost everything that I've made in the spring. So I had a lot of different things. I was messing around with options. I made some money on options. I lost some money on options, and it's been a learning curve. Then I got into, again in the summer, into these yield max funds, into the OLT. I had a dream about that. I held 40,000 shares of OLT at one point. I got into Misty. I got out of Misty. I had all those other funds, Coney and AMD and all the other yield max stuff. What I'm learning here this whole year is chasing yield does not pay off. Chasing quick wins does not pay off. If I compare my investment strategy into, let's say, my retirement accounts, and I talked about this in my Discord. By the way, my Discord's free, so make sure you come and join. There's great conversation. Lots of people are starting to engage, post great articles, videos, all sorts of cool stuff, market related. But one of the things I said this morning is something like my 401k and my IRA, something that I consistently purchase in, doesn't matter if market's up or down. I've done really well when I'm buying diversified funds that are spread across the whole market, S&P 500, NASDAQ, all that kind of stuff. Over the course of the past really 11 years, that portfolio has grown to a substantial amount. And when we have pullbacks like tariffs and all that kind of stuff, yeah, I can log in and I can see that pullback. But when I give that time, it doesn't look like anything. It's just a little blip on a chart. And all you see is this logarithmic movement in the upward direction. So this is something that I have to implement with this dividend strategy as well. I have to be able to withstand the downturns without panicking, without selling. Now, things that don't help are margin. Things that don't help are lack of diversification, leverage funds, and funds that have a very small sector. Kind of goes back to diversification. WPay, although it's shown great performance for the first couple of weeks of its release, at one point it was at $56. Great. But we know that there's some dogs in there. And we know that it is very tech heavy, very AI heavy. And until it's diversified more, until it has more companies under its belt, well, some folks will say, well, then you're not going to have those types of gains. Well, sure. But then you're also not going to have the 5 to 7% swings in a week. And, if you have a lot of money invested, let's say you have $500,000 invested in this, weeks like the last couple of weeks would really, really hurt you. And I'm always the last person to panic, I feel like, right? And people might call me out. No, you're not. You're always panicking. You're always selling stuff. When I sold my rental in March, I dumped my money. Again, another mistake. I never DCA'd. I dumped my money right before tariffs were announced and everything crashed. And I sat through all of that time, and I got out on the other end, and I was still in the green after I waited it out, after it recovered. In this scenario, I'm not as well diversified. Back then, I didn't have really much on margin. I wasn't really panicking. I was diversified. I didn't have much on margin. This time, I'm overexposed. And going into next week, I'm not sure. I'm not sure what's going to happen. Going into December, I'm not sure what's going to happen. So that, pushed me in the direction to sell my position. And I gave everybody a heads up. This is what I'm doing. Now, granted, the market turned out to be an uptick today. Absolutely the opposite of what I thought would happen. And usually I'll say that on this channel. Like, if you want to make money, just do the opposite of what I'm doing. So today was another great case. Today we had S&P 500 went from negative 1% up to almost closing at 0.5% in the green. NASDAQ up 0.29%. It was down 1.7% pre-8 market hours today. All right, we have Russell 2000 up in the green. volatility index has dropped, and gold is down 2.36%. So what does all this mean? Well, we had a little bit of a uptick today, right? So did I time this wrong? Absolutely. I timed this absolutely wrong, and I'll be the first one to admit it. But what is next for the market, right? And this is what I've been searching for the last couple of weeks. I've been doing a lot of research, reading, and a lot of people who are much smarter than me, they're saying there has to be some kind of pullback, some kind of correction. We have to fill a liquidity gap. Now, what is that gap going to look like? I don't know. Like, how far are we going to go down? No idea. Will S&P 500, will it drop back to 6,000? I'm not sure. I don't know. But I don't want to be the one holding 18 tech companies and having 45% of my portfolio on margin. So should I have sold later today? Probably. Should I have not sold? Maybe. We'll see. What if next week's a rally? Maybe. I'm an idiot. I don't know. But I had to start fresh. So this is one of those deals where you just got to pull the Band-Aid and just live with the decision. And this is where I'm at. All right. So let's talk about what I learned this year. And I actually sat down today. So I started with Fidelity, and I looked at what did I deposit into Fidelity, what did I withdraw from Fidelity, what I moved over to Robinhood, and what I have left at this point. I wanted to really know how much money I actually made or lost this year. Remember, I took a loss when I sold Ulti. I took a huge loss today. A huge loss today. Now, when I started this back in the spring, I deposited initially around $12,000. That's what I messed with. I sold my property. I deposited $175,000. Then I took out a loan against one of my rental properties. I deposited some more money in there. So throughout the first half of the year, I had almost $300,000 deposited into this account. Well, what did I withdraw while I was with Fidelity? I withdrew $72,000 from Fidelity during this time. And then I made on paper $80,000 in dividends. Now, when I went over to Robinhood, I moved over almost $185,000. Throughout the last month or so, I deposited another $10,000. While at Robinhood, I made $24,000 on dividends, and I withdrew $134,000 while I've been on Robinhood. So today I had a huge withdrawal. I decided to pay off the loan I took against my rental property, and my balance right now in Robinhood is floating around $113,000. I total withdrawal between Fidelity and Robinhood from my accounts were $206,000 this year. Totally invested $310,000. And you can see my actual profit for the year is $10,900. So the good news is I'm still in the green. I haven't really lost anything this year. And this kind of made me feel a little bit better because taking those hits, having all those losses throughout the year. But I've learned a lot of valuable lessons, all of that. I don't know if all of this was worth making not even $11,000, but I know what I'm going to do next with the information I learned. So in a way, it was a free lesson, right? What did I spend my money on? Well, I spent my money on, I had a huge renovation project at my house. I paid off some of my credit cards. As I was doing those day trades, I was taking the profits and I was paying down my credit cards. And I paid off some other loans. So my strategy was to capitalize on cheap debt, make more profit, pay off expensive debt, and kind of, just do market arbitrage at that point. Did I succeed? I would say no, I did not succeed because I've made mistakes throughout this year. The market's been really choppy. I'm glad to say that I didn't lose anything. I lost a lot. Well, I lost a lot of time, I would say. I lost a lot of time, maybe emotional energy, but I've learned a lot. I've built this channel, and you guys helped me by following along. So I think that was very valuable. Um, but yeah, so that's kind of where I'm at right now. Now, what am I gonna do moving forward? So moving forward, I just jotted down some ideas today, so I'm gonna share that with you guys. Let me switch over here. Okay, so moving into 2026, with my account reducing down to $113,000 at this point, I am still expecting WPay payment of 2,500 bucks or so. It's a little bit delayed, but so my account will be about 115. My dividend goal for 2026 is going to be by end of the year to hit $40,000 a year. Okay, so that's going to be the primary focus. So as far as margin, I'm going to limit exposure by avoiding margin. I will not be investing with margin. I will only use margin to float monthly expenses. So I'm going to continue to do the same process. All of my income is going to come into my brokerage account, and then I'm going to use basically margin to pay for any expenses and have the dividends cover the margin. Diversification. I'm going to buy into the broader market, exposure to the S&P 500, NASDAQ, Dow, Russell 2000, gold, Bitcoin. I'll buy dividend paying ETFs that hold their NAV and recover from market corrections. Funds such as QQQI, SPY, BTCI, TDAC, and others. DCA. I'm going to deploy biweekly cash into ETFs and buy on red days if possible. So this was another lesson learned this year, was I did a lot of lump sum investing, and that hurt me. DRIP. I will still have DRIP off and manually select when to reinvest the dividends to acquire more shares. This is kind of the high level white paper that I have for my new strategy. Now, in the next few weeks, I'm just gonna hang out a little bit. Okay, I'm not going to be doing much unless we have a huge pullback, and I'm gonna see it as a buying opportunity. Now, I did keep all of my other funds in place aside from WPay, so I'm still holding a lot of that, and I'll still be doing updates on that as well as any dividends that I'll be receiving from that. Now, this video is going to be obviously very controversial, as everybody's going to have many different opinions. And like I say, I don't give financial advice on this channel. I document my journey. You get to learn from my mistakes for free, and I get to pay for them. So let me know in the comments what you think, what you guys are doing, what your strategies are, how I'm stupid, or maybe this is not such a bad idea. But that's all I got really for today. This weekend, I'll have some more videos, I guess more around the planning on how to execute these goals. I'm going to talk about strategies to pay some of the debts off, strategies to build income, and that kind of stuff. So that's all I got for today, folks. So glad you're tuning in. Check out our Discord, have the conversation there, and we'll see you on the next video. Take care.